Good morning. It's Mary Bartos, the Bartos Group of Mary. And today my guest is Peter Prodnov from Finance of America. Good morning, Peter.
Good morning, Mary. Really, Mary?
It is really Mary. So today we're going to talk about mortgages. And in this climate right now, it's June 22nd of 2020. For those, we're going to date stamp it just so that folks know where we are in perspective, because mortgages are always changing.
Mm-hmm.
Peter, talk about the climate that we're in, right now that you're seeing in your book of business.
Well, about 3-4 weeks ago, I've really started seeing the purchase business kind of get really busy. We were in a little bit of a refinance boom, a mini boom. Rates really plummeted, I would say, 10 weeks ago. They kind of hit the bottom. There was about a week and a half where, the refinances applications were going crazy. Rates went up a little bit, so that slowed down. They stayed there for a couple, 3-4 weeks, and now they've come back down a little bit more, but not quite to the levels that they did, when that first refi boom started. But they're still lower than they were, probably from before the COVID thing. We're also starting to see some relaxation of like COVID-19 specific guidelines where products have been suspended, or they've increased reserve requirements or credit score requirements or things of that nature. So as far as my company is concerned, we're starting to see those things drop off. I think they've all dropped off except for the minimum credit score on, I believe, the FHA loan, where we used to be 580, we're still at 620, but I'm hoping that will drop back down here sometime soon. And we're going to start seeing some of the alternative lending products come back online, probably, I would say, in July. The bank statement programs, a 1 day out of bankruptcy, things of that nature.
What about jumbos? Have those come back in, Peter? Are you financing those?
Yeah, we never lost those. I've had jumbos the whole time.
Okay.
The rates are not as good as they were. They were a lot better. They were in competitive with the conventional rates before the COVID hit. Where the conventional rates were kind of at like 3.75, something like that, and the jumbo rates were about the same. They were 3.625. I was getting some jumbos on a 30-year fixed, but that's not the case anymore. They're, for me anyway, they're, in that upper 3, lower 4% range. I just think the risk reward for the investors is, they're pricing themselves a little bit higher. So it's harder for the, I guess, so they don't have to go into that risk profile. They don't want to. So not much we can do about it.
Right. They don't have to. They've got enough of
Correct.
The lower end. So talk about a jumbo. What's under a jumbo? What's the demarcation for that?
Well, the conventional loan limit is $510,400. So any loan amount above that would be considered a jumbo loan.
Okay.
$510,400 loan is going to get you a pretty, for the most part in Southwest Florida, it's going to handle a lot of properties in that price range, probably 600 to 650 or less. If you're putting 20% down, you'll get under that 510 loan limit. And I think our company, we're coming out with a new jumbo product, a proprietary one that's not with, we sell to the bigger banks like Wells Fargo and Chase. They offer us some jumbos, but then the rates they offer us aren't nearly as good or quite as good as what they offer themselves retail at through their bank. So they kind of they cut our legs out from under us. They offer us a product, but the rate's not as good, even though it's the same product. So we're coming out with our own so that we don't have to deal with that anymore. We can be much more competitive in the jumbo marketplace.
When you say you're coming out with in the next month, in the next week?
I think the training on it, I have it scheduled. Let me look on my computer. Is tomorrow, and I think it comes. I think it goes live on maybe the 26th of June. So here within the next week. So So I'll be
Yeah.
interested to see what the requirements are, what the rates are. I haven't seen anything. I've gotten email notifications that we have a new product and what it's supposed to do. So we'll see how good it really is once I can kind of dive into it, take a look at it.
Of course. So June 22nd of this year versus June 22nd of 2019. Difference?
Between 19 and 20?
Yeah.
Oh boy, I can't remember that far back, to be honest with you. It's all a blur for me. I get mortgage applications, I get contracts, I close them, and then I'm on to the next one. That's hard. I think last year obviously was much I think calmer. We didn't have the COVID nonsense, and it's just anytime you start getting into a political year cycle too, things get a little haywire, I think, as well. So, and that's another thing. So, and from what I'm seeing, the virus is spiking a little bit. We're having the positivity rate of about 12.5% for every 100 tests that are taken, which is a lot higher than where we were in Florida. And I think if I read correctly, is 88% increase in the last 3 weeks. So I don't know if it has to do with the rallies or just people being out and about, but at the end of the day, eventually we're going to get into herd immunity or a vaccine will come out. So, but I don't think we can continue living cooped up like chickens. That's for sure.
Yeah, for sure. I mean, what we're seeing right now with buyers is they couldn't wait to get out of where they were.
Yep.
Didn't want to quarantine where they were before. So they're looking for their homes, and we're seeing a huge influx of folks that want to get down here before the winter.
Mm-hmm.
Although we quarantined down here, Peter, as you and I well know, we had a pool. I could go to the beach.
Yep.
It was open. We could be out on the streets and not have to worry about it. Very different. Interesting enough, my husband and I, Joe, went over to last weekend to Hollywood, and in Broward County, they have to wear masks everywhere.
Yeah.
It's just mandatory if you're out amongst people and you're indoors. We went to Margaritaville and they actually gave us masks. They're super cute. But such a different world than where we live.
Yeah.
That's Florida, because we're not really seeing that same influx because we don't have the number of people that
Right.
we have there, or our population is a little bit older and they're more careful. Yeah, exactly. Exactly. So, one of the things that we're seeing is with a strong, property real estate market, and with great mortgage rates,
Mm-hmm.
we're expecting this to go on until beginning of October sometime when we get into the election rhetoric.
Yes.
Started, but it hasn't really started. Would you agree with that?
I think so. I understand inventory is kind of low right now. Is that correct in the housing?
Yeah, it is. And a lot of our properties are getting, the ones that are good, well-priced properties are getting multiple offers.
Yeah, and that I've had a couple clients with pre-approvals that have gotten into kind of bidding wars, and I've got I think a couple contracts where they got them for over asking price, which is a very interesting thing in this market. But it's all the supply and demand principle. So there's not a lot of supply, and there's buyers out there. They're going to fight over what's available, which is good. It's good for the sellers, right? It's good for the market. It's good for everything.
It is definitely good for everything. I think last week we had 4 properties that went into a bidding war, and we're currently working on one right now. And these are in our market down here. We see that often in any kind of market, in Golden Gate Estates, Golden Gate City. Those are very notorious for well-priced properties into a bidding war. But we had, 2 of them on Marco Island, actually 3 of them on Marco Island in the last week, which typically does not go into a bidding war.
Yeah.
Amazing.
Yeah, it was kind of crazy. I remember, I think it was about 3 weeks ago when the market when things started really heating up, and I remember it was a Friday, And literally, I think I took 6 mortgage applications on that Friday, and I think I had 8 more come in over the weekend, and then another 7 or 8 on Monday and Tuesday. I was like, oh my gosh, what am I? There's a lot of applications. I don't normally take 18 applications in like 4 or 5 days. So it was busy. Had a lot of work, which is good. I'm not going to complain, but that was kind of a first for me. It seems like everybody, they're all piled up at the door waiting to get out of the building, and the door opened and they just all came out all at once.
Yeah.
So,
there was a question that popped up from our audience. It said, what is the current interest rate for a 30-year fixed mortgage?
Okay. The conventional rate, if you're putting 25% down, you're going to be, I just priced one a little bit ago, just before I got on this call. I took an application. I was at 3.375 on it with a 30-day lock on a 30-year fixed. FHA rate was at 3.25%. And these rates are with no points. I don't charge any points for my rates. If the borrower wants to buy a rate down, I will give them that option and tell them how much it's going to be. But the rates that I quote are without any points.
Awesome. Which is excellent. Now, when you have that obviously also depends on your credit history.
Credit score, and that's with a 740 or higher credit score, correct?
Okay.
Yes.
Yeah. For those of you listening out there, talk about for a first-time home buyer. What's that looking like? What are some options for them?
Well, the best option we have right now, that I have right now, is just a regular FHA loan. The Florida bond program for us is not online yet. I'm not sure if it's just not online at all for anybody. But we don't have it available. With the COVID, a lot of those bond programs got suspended. And there's bond programs, or the first-time home buyers, which are down payment DPA programs, down payment assistance programs, all over the country. They kind of got suspended. So we're starting to see in my company, we saw a big influx of many of the states came back online. I still do not have the Florida available. I don't do a lot of them. The market that we're in for, Collier County and Marco Island, there's income restrictions. You can't make too much money. There's minimum credit score requirements. Sometimes the borrowers have a little bit of money. The rates tend to sometimes be a little higher on those down payment assistance programs than if you had 3.5% or 3% down. But they're not online yet, but they are available. They'll give you, you can get either 3% of the purchase price or $7,500. So really, depending on what the purchase price is, tells you which way you're going, because you want to be able to get as much money as possible. So I think, maybe $225,000 house might give you more than $7,500 on the 3% program. If you're under that, you want the $7,500, because that'll cover your down payment easily, and then a little bit of your closing costs as well.
What's the difference between somebody that first-time home buyer that wants to go conventional, say at 10%, and the other programs you were just talking? Is it the type of property that they're looking at?
There's no, if you're a first-time home buyer and you're just going with a regular conventional loan or even a FHA loan, and you're not using a down payment assistance, there's nothing. You're just like any other buyer. There's no things that we look at. There's no benefit. There's really, it doesn't really mean anything that you're a first-time home buyer at that case. I get a lot of borrowers and even some realtors that kind of are confused with FHA. They think FHA stands for First-Time Home Buyers Association or Administration or something, which FHA is a HUD, Housing and Urban Development Program, for the Federal Housing Administration. And that is strictly just a program for buying a primary residence only. So whether you're a first-time home buyer or a fifth-time home buyer, or you make $1 million a year, you make $50,000 a year, you can get an FHA loan as long as you're buying your primary residence and you stay under the FHA loan limits, the HUD loan limits. So,
well, we had a question here. One more question. Repeat the FHA rate. What is that?
3.25%.
Okay.
That was my current this morning.
How about FHA? Does FHA lend on condos?
They do. They will lend on condos. They do a spot approval now. more like Fannie Mae and Freddie Mac do, but it's still a pain in the rear end. I still have. I mean, they changed everything. I think last October. I've not done an FHA condo yet, and
Okay.
I do quite a bit of condo financing, but for 3.5% down on an FHA. A lot of times the people that need 3.5% down are lower income borrowers. So I can put them in a competing Fannie Mae product that is only 3% down. So it's less money down and it's much easier on the condo. But you don't see a lot of people that are in the lower income brackets buying condos because the association fees really reduces their buying power. Right, that's going to cut into how much house they can buy. So you might be able to get $150,000 mortgage. If you go into a condo, you might only be able to get $100,000 or $110,000 condo because your association fee is $400 a month. So
Sure.
it really reduces the buying power. So although they tried to make it a little bit better, I'm still not seeing a lot of FHA condo products out there. It's just much easier to go conventional and go 5% down. It's an extra 1.5%. It's not a ton, but where there's a will, there's a way, right?
Without a doubt. And we had a question up on the screen. How many times can you do FHA or, any other one of those types of products?
As long as you can continue doing FHA loans as many times as you want, but you can't keep buying multiple properties, buying them with an FHA loan, leaving it, buying another one with an FHA loan, and keeping the one you had prior to. The general rule for FHA is if you, let's say you live in Naples and you have an FHA loan and you want to buy a new primary residence in Naples, Florida as well, and you normally wouldn't be able to buy the new one with an FHA loan and keep the other one as a rental. You really can't have two FHA loans within a certain mileage radius of each property. They don't want FHA loans to be used to buy properties and then leave it and then build up a rental pool of properties. You have to be moving like more than 100 miles or something away to a new job. Like if you owned one in Naples, an FHA loan, you wanted to keep it, but you took a new job in Fort Lauderdale and you're moving across the state, then you want to buy an FHA loan there and keep the one you have here in Naples, that you could do. But in the same town is a no-no. So that's really the only restriction on FHA.
Okay.
As far as how many times you use it.
Well, Peter, what else do you have to tell us about, what's new in mortgages in the last, month or so from the last time we talked? I mean, I think we did one on first-time home buyers maybe a month and a half ago. What's new? What else is new? You're getting a new jumbo loan with.
We're getting a new jumbo loan. We are coming back online in July with our rental, our Finance of America commercial, which is our investment property, rental property financing, where we finance based on the cash flow of the property, our fix and flip loans, our construction line of credit for builders. So that's going to be coming online back again in July. That one was suspended with the COVID. And like we talked about, we're seeing a lot of these guidelines that they kind of added on because of COVID are starting to go away. So nothing really new other than the new jumbo product. Just kind of really what's new is we're starting to get back to normal.
Yeah. Let me ask you kind of I know you don't have a crystal ball, but if we do go into some kind of quarantine again, what's your crystal ball prediction on what will happen with mortgages? Do you think we'll go back to what we did, or we kind of been there, done that?
Yeah, I think, I don't know. I think they may go back to adding some of those overlays to the underwriting guidelines. I think what they did worked well enough. Some companies overdid it more so than others. I mean, I got calls from a lot of other mortgage lenders. Hey, I can't do this. Can you? Because my company's lost their mind and they're, making you have a 700 minimum credit score with, 30% down on an FHA or something. And nobody does that. No buyer is going to do that. So I think if we go into another quarantine, I really think what it'll do is it'll affect the housing market a little bit with the buyers. It'll put them probably you're gonna have pent up demand again, like we did this last time, right? Because people aren't going to be out and about looking and buying. So once it wanes again, you'll probably see another huge influx of buyers hit the market, and everybody will be running around like crazy, showing properties and making offers and that sort of thing. But I think the mortgage, and as far as rates are concerned, and things of that, I think they'll probably remain pretty flat. The government obviously is buying a lot of mortgage-backed securities, trying to, unfortunately, artificially keep rates down, is what they're kind of doing. The market's not keeping the rates down. The federal government, in my opinion, is keeping the rates down because of they're buying millions and millions of dollars of mortgage-backed securities, and when those get bought, the value goes up, and then the rates go down. So, I really think we're going to see a stock market correction. So if there is a correction in the stock market, I think that will bode well for mortgage interest rates, because the money will be moved out of stock market and maybe into bonds or mortgage-backed securities or some other form of investment. I think that's kind of looming on the horizon, but that's my personal opinion. I'm not an expert on that stuff.
It's funny. I have a client that is in the stock market, and that's what he does for a living. And he said boats, houses, cars, a couple other things. The money is just flying off the shelves with people that are buying things that they didn't have. And interesting enough, he said that, they have more time.
Yeah.
Didn't spend as much money in commuting and time. And so therefore, they weren't eating out. It'll be interesting to see. When we drove into the east coast of Florida, again, we're in Southwest Florida, Naples, Marco Island, Estero, Fort Myers. We went about 6:30 at night on a Friday, and it was like almost zero traffic. I exaggerate a little bit, but it was like 6 cars, going into Hollywood from, it was just like unbelievable. There was more traffic on Sunday coming out at like noon than there was going in at like rush hour.
Wow.
So I still think with people's ability and desire to work from home, and we had an opportunity with Charles Schwab, their senior analyst, to speak with us. She golfs with one of our agents, and said with the desire of the consumers to work at home and the willingness of the employers to allow them to do so, we may get a nice influx into our area. Second home, area that typically, big cities, other areas where they had to work to commute, now they don't have to.
Yeah, so they can work 6 months of the year here and 6 months of the year there.
Yeah, or they can just stay here and have it be their primary residence and maybe fly in once in a while.
Yeah.
So it's, who knows, because after 9/11, she said she would have thought there would have been an exodus from like a big city because of the fears with that. I love the big city. So I don't think we'll ever see that in that case, but dreams still come true and people want to live where they love.
Yes.
As the hashtag goes, live where you vacation.
Yes.
Certainly in our area.
It is. And I think, and I'm in that boat too. I'm like, I can work from home. All my stuff's automated online. I've got my setup with my 3 screens and all my printers and what I need. I mean, I can work from here. I can work from my lake cabin in Minnesota. Nobody knows where I am. As long as I'm getting the work done, I don't think anybody really cares, right? As long as you're getting your work done.
Conversations with you up in your lake home in Minnesota.
Yeah, as long as the work gets done and everybody, and you do what you need to do, it doesn't really matter where you're doing it from, whether you're in an office or in your home office, or, it really is irrelevant with technology these days. You can do business from anywhere.
Absolutely.
Yeah.
Absolutely. And just like we're here today, you're in your location, you're in your home office, I'm in my office, and we're able to pull this together.
Absolutely.
Well, it is such a delight, as always, to have you on this show or any other show that we have. And for the Bartos Group, I'm Mary Bartos with Premier Plus Realty, and we're on Really, Mary?
Really, Mary?
Really, Mary? Ciao. Thanks so much.
You're welcome. Thanks for having me.
Uh-huh.